Tax is being reimagined for today's world. Tax is being reimagined for today's world, a world that has changed dramatically. Geopolitical shifts, technological innovation, globalization, new business and consumer demands. These trends are transforming the way tax leaders are thinking about tax. And businesses tell us they spend more on annual tax compliance than on their annual audit. The old country-by-country, tax-by-tax approach no longer works. Businesses increasingly want a strategic relationship with a partner who can travel the journey with them to a new target operating model for their tax and finance functions. A model that is digital, global, efficient, and effective in unlocking strategic value. Welcome to Tax Reimagined, a new framework which brings together our tax knowledge and transformation skills, our leading technologies and our expertise in delivery across the world to meet the new demands businesses face. This is not a one-size-fits-all approach. It's about deploying skilled solution architects that can work with you to design, implement, and continuously improve the target operating model, and aligns your tax department's vision and strategy with the broader business objectives, from in-house automation to outsourced managed service solutions. This teamwork is a platform for reimagining the future of tax. KPMG is investing collectively and is committed to innovation and developing our suite of tax technology solutions, training 10,000 of our tax professionals to become experts in technology and solution architecture, building best-in-class regional delivery centers and consistent global delivery standards. By acting collectively and acting now, the future of tax is here.
Good morning, everyone. You're welcome to our KPMG Tax Chat. My name is Peter Nwubi, and I'll be facilitating this session. Our topic for today, as we all know, is the ABC of free trade zones, the attributes, the benefits, and the challenges. What is a free trade zone? What are they about? Does it mean that the transactions that happen in there are free? Does it mean that what exactly is free in the zones that made them to be designated as such? And we'll be having a very interesting program today. And we have also our host, and we have two guest speakers. We have Martin Saruge, and we also have Mr. Lucky Obodeke from the FRS, who would also introduce themselves better. So please share these links, share the links, share the links, share the links to your friends, share the links to your clients, share the links to your colleagues, and tell them the program is about to start. And we are all geared up to have a very interesting discussion. We are going to be having different aspects of this session. Of course, there will be the question and the answer. There will be poll sections where we would ask questions, predetermined questions that we would also encourage you to respond to. And we would also have instances where you can throw your questions in the chat group, and we would read it out for our guest speakers to also address. We'll start with a poll session to enable us invite other members and also give some time for everybody to join. So we'll have some poll questions that would be shared very shortly. And Precious will be anchoring that session. Precious Adeneko, a colleague, would be sharing those questions now on the screen. Precious. Hello, Precious. Are you ready?
Oh, God.
Precious, you're on mute. We can see please, you can visit that link on the screen now, or use you can scan the QR code on your phones to be able to access the poll session. If you see this link, the Slido link, https app Slido event for the poll questions, which will start very shortly. And or you can scan the QR code to access the chat polls. So we'll give like a minute for that, please. Okay, the questions are up. That's the very first questions. First question there. How much do you know about FTZ, free trade zones in Nigeria? How much do you know about free trade zones in Nigeria? We have almost 100 of us on this group, on this session right now. So only 9 responses so far. Please, can we respond? You can either scan the QR code or visit that link that was displayed earlier. 64% know a little about free trade zone. 18% knows very much, 21 now. And we have some people on this call right now who don't know much about free trade zones. Just 14 responses so far out of about 100 of us. Please, can we please join? Scan the QR code or visit the link that has now been pasted in the chat session, in the chat group there. Thirty responses. Can we get this to 50 very quickly before we move to the next question? 60% knows just a little about free trade zones in Nigeria. 27% does not know very much. And we still have some of us here, 12%, who says they don't know anything about free trade zones. 34 responses so far. Okay. I think when we get to 40, so that we can save time. Okay, we're at 40 now, with yes, at 43, good. So we have more of us on this session that knows just a little, 55%, not very much at all, 30%, but very much 16%, which is good. Okay, so can we move to the next question? Next question, please. Yes. Do you think that FTZs are beneficial to corporate entities? Do you think that Do you think that FTZs are beneficial to corporate entities? Yes, I think majority of us believe that, yes, 78% of us believe that FTZs are beneficial to corporate entities. 22% says that they are not sure. And interestingly, we have a few of us here, 3%, that feels they are not beneficial. That's interesting. That FTZs are not beneficial to corporate entities. Wow. Okay. Okay. I think they've changed their mind. It's now on 0%. Okay. So it's good that about 80% of us here believe that FTCs are beneficial to corporate entities, and that's good. Okay, we'll definitely find out more before the end of this session. The next question, please. Who designates an area as a free trade zone? Who do you think has the power, the authority to designate an area as a free trade zone? Yes, please keep the question answers coming. We have 90% who believes it's the president. We have 9% who believes it's the governor, and 4% currently who feel is the minister that has that authority. Okay, more answers are coming in. Who designates an area as a free trade zone? Is it the president, the minister, or the governor? Okay, we have a number of us are not currently participating in this poll. We have about 150 persons currently on this program, and only 41 responses so far. But it's good enough that, okay, currently we have the majority of the House saying 88%. 88% of us are saying it's the president. 7% believes it's the minister, and 5% believes it's a governor who has the authority to designate an area as a free trade zone. Okay, if you stay put, we will find out and confirm this before the end of the session. Can we go to the next question? I think we have about 5 questions. This is the fourth of the 5 questions for this first poll session. Companies in the FTZ are exempt from all taxes, irrespective of where their customers are or vendors are located. Is this true or false? Is this yes or no? Companies in the free trade zone are exempt from all taxes, irrespective of where their customers or vendors are located. Is this true or false? Is this a yes or a no? Do you think that companies in the free trade zone are exempt from all taxes, irrespective of where their vendors or customers are located? This is a keenly contested answer here where a lot of us think is true, a lot of us think is false. Yes or no? It's currently equal, 48-48, okay. More of us think it's 50 now for no and 44 for yes. Wow. So I think no has it. Okay, okay. The no's have it. So a lot of us think that companies operating in the free trade zone are not exempt from all taxes, or based on certain conditions, yes. Okay, while about 43% thinks irrespective of where your customers, your vendors are located, you are fully exempt from taxes. Okay, so it's definitely going to be an interesting session. This is the last question of the first poll. And I again welcome every one of us to this program today. My name again is Peter Nwobi. As I can see, more people have joined compared to when we started earlier on. My name again is Peter Nwobi. I'm a senior manager in tax, KPMG, Nigeria. And I have 2 of our guest speakers here. We have Martin Saroge. Martin Saroge is a partner, Energy and Natural Resources Unit of KPMG. And we also have Mr. Lucky Obodeke, who is a director Director from the Tax Incentive Management Department of the FIRS, Federal Inland Revenue Service. I would allow them give a brief introduction and say hello to the house before we then proceed. Martins.
Thank you, Peter, and thanks everyone for joining us today. My name is Martin Daruge, like Peter already mentioned, a partner in the Tax Regulatory and People Services Division of KPMG, and I'm focused on providing tax and regulatory services to companies operating in the energy and natural resources space of the Nigerian economy. This is a very topical issue. We've been inundated with questions from a number of clients, potential clients, around free trade zones and what exactly do they offer, and why should we be looking to set up shop in a free trade zone? Are there specific benefits that come with setting up shop in the free trade zone? What do we need to know before we make that decision? So we believe that a session such as this would be beneficial to everyone who's made out time to join. And fortunately for us, we would also have the opportunity to have a director at the Federal Inland Revenue Service also be present at some point in the session today to also shed more light and answer some of the questions that you may have on the operations of the free trade zone. The session is titled the ABC of free trade zones in Nigeria. And it's that simple, ABC. Just trying to break it down for everybody who's made out time to join today. I'll hand over to Peter. I'm not sure Mr. Lucky is currently on because he's been having some connection issues. But if in the next 5 to 10 minutes he will join. But we'll keep on with the session, and when he joins, he will join us from where we are at that point. Thank you, Peter.
Thank you very much, Martin. Thank you. Yes, Mr. Lucky, he reached out. He said he is actually having some network challenges, but he's actually trying to join in and should be here very shortly. And when he joins us, we are going to introduce him again, or give him time to at least introduce himself. Yes, the ABC of free trade zones, the attributes, the benefits, and the challenges. We have specifically decided that we are not going to assume we have, like from the poll questions, only about 12% of us on this call or this session have full understanding of what free trade zones are and what the benefits are of operating from there. We would go quickly. We'll start quickly with the questions and answers. Of course, as we said earlier, the ground rules. You can post questions that you have in the chat box and we'll read them out intermittently. So the very first question, I want to make it as basic as it can get. What are free trade zones? And I think, Martin, you can then take this and let's start the discussion. What is a free trade zone? Can you just give us a general overview of what they are, what it is, what is a free trade zone?
Okay, thank you, Peter. It's in the most simplest term, a free trade zone is primarily a designated area that offers special economic benefits to the participants within the area. It's typically designated. When I use the word designated, is that it has to be defined. The perimeters of the area has to be defined, and you would then basically have people who then come into the place, participate in economic activities within that particular area, and are then entitled to specific benefits. Originally, when the framework of free trade zones, or in some jurisdictions, what you would find is that they are called special economic zone. The original mindset around setting it up was that governments across the world thought it would be a fantastic opportunity to, in a sense, improve economic activity in terms of industrialization. So they wanted to incentivize certain economic activities, and they thought that it would be great to have a specific area where you could then plan infrastructure, have the right facilities to incentivize growth. So it wasn't just about tax. Tax wasn't the primary reason for setting up these zones in the first place. It was basically to drive specific economic activities. And so when they set up these designated areas, you encourage people to come in. These areas are typically well planned. You have adequate infrastructure. In some of these areas, you have maybe access to utility at subsidized rate. In some of them, you would have tax benefits. Some of them you would have access to the export markets, maybe access to a port where you can easily export the goods that you produce in that area. So that's the concept of a special economic zone or a free trade zone, having a designated area, a defined area where economic activities take place with access to top-class infrastructure and in most instances, specific tax benefits.
Thank you very much, Martins, for that very explicit response. I mean, what I took from there, he said it's usually called or generally known globally like this as a special economic zone, and not necessarily for taxes alone, but taxes as some of the benefits. I mean, you've already started touching on the topic, some of the benefits that enterprises that are located within this zone can actually get from there. So during the poll, there was one very interesting question that was raised about the person or the relevant office who has the authority to designate an area as a zone, as a free trade zone or special economic zone, as it may be called. So can you clarify that question? If I recall, the polls had varying responses. A lot of people thought it was the minister, some thought it was the governor. I think majority felt it was the president. So who or which office actually has the authority to designate a zone as a free trade zone?
Okay. In reality, I would explain the process. The process, first of all, is now you have free trade zones that are set up by governments, and you also have free trade zones that are set up by private entities. So I would focus more around the process of setting up a free trade zone by private entities, given that the bulk of our audience here today are private entities or representative of private entities. So the first thing that you would do if you wanted to set up a free trade zone today is that you would first obtain the land. You would have to first get a land that you would want to designate as a free trade zone. Now, that land must be free of any encumbrance. What it means is that you would have consent from the relevant governments and regulatory authorities that prove that you have access to that land. Access may not necessarily be ownership, even though ownership is typically what is required. But you should have a land that you want to designate, and that land must be free from any encumbrance. Once you do that, the next thing you will then need to do is determine what sort of activities would you want to undertake in that particular zone. Would it be restricted to a particular activity? Would it encompass a number of activities? And thereafter, with that information, you will then be required to prepare a feasibility study. You need to be able to demonstrate that it is economically feasible and viable to designate that area as a free trade zone. What will be the benefits that would accrue, not only to the participants, but to the community in which the area will be located, and most importantly, to the country as a whole. Will the activities there stimulate employment in specific areas? Would it provide a means for the country to begin to earn much needed foreign exchange? What exactly are the tangible and intangible benefits that will be derived from setting up that zone? All of these are things that you will cover in your feasibility study. So when you have all of this, and then you will then be required to demonstrate financing, because like I said, it is very, very important that a free trade zone has the required infrastructure to support the operation and growth of economic activities. If it doesn't have the infrastructure, then it's no different from any rural area or urban area. You might as well just pick land anywhere and continue to operate. So there has to be specific standard infrastructure that you would have in the zones. And in order to be able to do that, you need to have the resources to be able to provide this infrastructure. So you will need to demonstrate that you have the finances. It may not necessarily mean you have cash sitting in the bank. It may be that what you have are agreements with banks to provide you with the finance. But there has to be some documentation that supports that you have the financing to be able to develop the zone if granted the approval. Now, when you have all of this, you can then submit an application to the Nigerian Export Processing Zone Authority, NEPZA. So NEPZA is the authority that would have the opportunity or the first level opportunity to review your application to designate an area as a free trade zone. If NEPZA is satisfied that you've met all of that requirements and that you have everything that is required to designate an area as a free trade zone, they will then recommend to the Minister of Trade and Investments. They will send a letter of recommendation saying, we've reviewed all of the documents, we've also looked at the land, we've inspected the land, and we believe that there is a viable case to designate this area as a free trade zone. They would send that recommendation to the Minister of Trade and Investments. The minister would then subsequently send a recommendation for consideration by the Federal Executive Council. If the minister is also satisfied with the recommendation given or you've obtained from NEPZA, the person who has the sole authority to finally order the establishment of a free trade zone is the president. So after deliberation by the Federal Executive Council, if they are also satisfied, the president may then ask or issue an order saying or designating the area as a free trade zone. This presidential order will then be published in the Gazette. It has no effect until it has been published in the Gazette. But even after the order designating the place or the area as a free trade zone has been published in the Gazette, the zone does not become operational. If you remember what I said at the beginning, a free trade zone has to have a defined area. So you don't want a scenario where there are doubts as to where the coverage of the zone is or where the boundaries of the zone is, even though all of this will be stated in the presidential order. So a free zone only becomes operational when you completed perimeter fencing around the designated area defined in the order. So even after the Gazette, you would still have the responsibility to build a perimeter fence around that designated area. Once that is done, that is when a free trade zone is deemed to have become operational. So that's the process. So for those who said the president, I would say that you are correct. But before it gets to the president, there is a process that you need to undertake before you get to that point. So I'll stop here. Mr. Lucky has joined us now, and I think Peter would allow him to do the introduction, if he introduce himself.
Yes, definitely. Mr. Lucky, can you hear us, please? Mr. Lucky, please, if you can hear us, can you unmute yourself and introduce yourself, please? Okay, I don't think he's still able to hear us. Mr. Lucky? Okay, while we wait for him to for his introduction, I can just quickly do a brief summary of what Martins has said in response to the last question. For those who just joined us, Martins was addressing a question that came up in the poll where we asked who designates an area, who has the authority to designate an area as a free trade zone. And the options then were the president, the minister, and the governor. And of course, we had varied responses, with majority of the House going for the president. I think Martins has authenticated the question to say, yes, the president has the final authority to actually designate an area, but it goes through a set of processes that has to actually be completed before it even gets to the president, right from confirming that the land is free of any encumbrance to the selecting the kind of activity that you want to do in that kind of area that you want to designate, carrying out a feasibility study, determining and ensuring that you have source of finance that is dependable. And of course, you submit an application to NEBSA, and NEBSA also makes a recommendation to the Ministry of Trade and Investment, and then they also make a recommendation to the Federal Executive Council before it then gets presidential assent. The area also needs to be, the perimeter of the zone needs to be fenced properly before it can then be confirmed as an area designated as a free trade zone. So yes, those who chose president, you can clap for yourself. The president has the ultimate authority to designate an area as a free trade zone. Mr. Lucky, I don't know if you are here yet. Okay. Okay, I think I think he's trying to connect. Can you hear us, Mr. Lucky? Not yet. Okay, so I think we will still continue. There are questions. As we said earlier, you can drop your questions in the Q&A section just underneath. Yes, Mr. Lucky is here. Good morning, Mr. Lucky. You are muted, sir. Mr. Lucky, we can't hear you because you are still muted. Okay, I think there's still some network glitches from the video quality that I could notice that. So we'll just continue. We have treated about two questions. I can see questions are already coming in the Q&A segment. Please drop your questions. We'll come there very shortly. We now know what a free trade zone is. We know who designates an area as a free trade zone. The next question that I would like to ask, and of course, Martins, you would also assist with this. Who can then operate in a free trade zone? I mean, everybody likes, from what you've said, the topic again is the ABC of free trade zones, the attributes, the benefits, and the challenges. So far, we've seen that, yes, there are some benefits, and I'm sure a lot of people on this currently online here would also want to benefit, who also want to tap into those benefits. So who can operate in a free trade zone? Martins.
Anybody who has a license to operate would be able to carry out operations in the zone. Now, once the zone is set up, like I already explained, a management authority would have to be set up to run the zone. So the zone management authority would have to be set up to run that zone. And that authority, in conjunction with NEBSA, would consider the application of every entity that seeks to operate within the zone. Once they approve your application, you would be authorized to operate in the zone. You'll be given a license to operate within the zone. There are approved activities that are stated under NEBSA, under the NEBSA Act, which basically you would have to undertake within the zone. But the Act also allows the authority and the authority to extend the list of approved activities that anybody can undertake within the zone. So if you follow those list of approved activities and you obtain a license to operate from the authority, then you should be able to operate within the zone.
Okay, thanks. From what you've mentioned and what you've said, I think two things came out very clearly. One is that you have to be an approved enterprise, you have to be licensed to be able to operate within the zone. And two is that you also need to be carrying out approved activity in line with the specific activities listed in the schedule to the Act, the relevant regulations and laws of that governs the administration of the zones. Yes. So for an enterprise to be able to operate within the zone, you need to be licensed, and you also need to undertake approved activity. Thank you. I think Mr. Lucky is here now. And Mr. Lucky, good morning.
Yes, sir. Can you hear me now?
Yes.
Good morning. Can you hear me now?
Yes, we can hear you.
Okay. Okay. I am deeply sorry for the initial glitches. I had to bring in the IT people to help me get onto the link. I am sorry.
No, it's fine. You're welcome, sir.
Sorry, but I am in now, so let's continue.
Yes.
I may not
continue, sir.
heard what has been said, but at least from this point onwards, I can continue. And if there is anything that I can now take it.
Thank you very much, sir, for finding time to join us. Yes, you haven't missed a lot. What we have discussed so far, we've tried to explain. Martins has done a good job in trying to explain what a free trade zone is, and who can designate an area as a free trade zone. He's also tried to touch on the activities, those who can actually undertake business within the zone. So you have not missed much. I think you can also do well, sir, to just give a brief introduction of yourself. We did it earlier on, but I mean, it would be better to hear directly from you.
Yes, I think the two earlier interventions are correct. For you to operate in the zones, you need to apply, and your application will have to be approved. You have to be registered by the authority, and you also be registered for one of the activities that are approved within the zone. The zones are not an omnibus business cycle. There are specific businesses that are approved to be carried out in the zones. So if you are registering, you will activities within earlier on is very correct.
Okay. Thank you. Thank you, Mr. Lucky. So yes, we now understand that you have to be registered, you have to be licensed to operate. And the next question that we would like to throw, based on based on popular questions that we typically get from our clients, can the FIRS decide not to recognize the FTZ status of an entity, even if they have been licensed to operate within a free trade zone?
Entity.
I don't know if you got the question, sir.
If an approval and that approval still subsists, no. You said, can FIRS decide not to recognize an enterprise that is registered?
Yes.
Did I get you right? That can FIRS decide not
to recognize
decide not to
recognize the FTZ status of an entity, even if they are licensed to operate within a zone?
No, that is what I am addressing, that FIRS cannot decide not to recognize an entity that is legally licensed to operate within a zone. FIRS will not do that. FIRS does not do that.
Okay.
But if your license is suspended or has elapsed and has not been renewed, at least for that period, even though there is a minimum period stipulated by the NEBSA or OGSA for you to renew. If your license has expired and it has not been renewed, or if it is suspended, yes, you cannot enjoy the privileges of an approved enterprise for that period of infraction.
Okay, thank you very much. I think it's very good to know that if an entity is duly licensed to operate within the zone, it should be recognized by the FIRS and other relevant stakeholders. The company will be recognized, will continue to enjoy the benefits of the free trade zone, and will be duly recognized by FIRS. I think the other issue that has come up is instances where we have companies that are registered under CAMA, but are also duly registered and licensed to operate within the free trade zone. Is there anything in the law that prohibits this type of situations, where an entity registered under CAMA is also duly licensed to operate in the free trade zone?
Is that a question for me or for?
Okay, sorry, it was a follow-on question to the one you responded to. Yes, please.
Okay, yes. For entities that are within the zone that are approved and licensed by NEBSA or OGSA, dual registration. Their registration status is handled by the authorities of either NEBSA or OGSA. So an enterprise that is a business that is registered under CAMA is outside the zone legally. And if you are registered under CAMA, you are coming into the zone to operate, you are not an enterprise per se. So we may have situations where entities that are registered under CAMA may be allowed to carry out some specific, maybe contract or assignments inside the zone. That does not make them approved enterprise. But to have dual registration, I don't think that is appropriate, and I don't think that is allowed.
Okay. Martins, I don't know if you want to chip in on this.
Yes. The way I would look at it is, can a company who has CAMA registration also operate within the zone? I think the process of getting approval to operate within the zone is pretty straightforward. Once you have a license to operate, you will be able to operate within the zone. Maybe you would have to view your zone operations as a different operation from your CAMA entity. Because if you look at the NEBSA Act, it basically says that registration within the zone has the equivalence of incorporation under CAMA. So what you probably have will be two separate entities. A wholly owned free zone entity that is owned by a CAMA entity, because there is nothing that prohibits a CAMA entity from setting up a wholly owned free zone entity within the zone. For reporting purposes, they can consolidate and report as one. But in my opinion, I do think that it is possible. It's not very different from when you have a non-resident entity operating in Nigeria, and then it begins to prepare accounts and reports for its Nigerian operations as a permanent establishment separate from the overall entities. It's like a management account that it prepares. So I think that it's possible to have a CAMA entity set up a free zone entity also. So I won't use the word dual registration. I think you will basically maybe treat them as two separate entities. The free zone entity separate from the CAMA entity. because at the end of the day, everybody that will be set up in the free zone would have a promoter anyway. That promoter can either be individuals setting it up as a fresh entity or a corporate entity. So if your promoter is already a corporate entity, which has, again, for legal purposes, treated as a person, as a legal person, then I think it should also have the ability to set up a free zone entity and have a license to operate within the zone.
Okay, thank you, Martin. So I think from the comments so far, it does seem that a company can actually have dual registration, subject to certain observing certain protocols, like Martin has tried to describe. Does that then mean that to have a dual registration, you would have to set up two separate entities to operate that? And I think I would also want Mr. Lucky to actually address this, because from Mr. Lucky's response, it did seem as though it's dual registration. Dual registration was not, or was prohibited, if I heard him correctly. So, Mr. Lucky, can you again kind of clarify how a dual registration would operate in practice? Hello, Mr. Lucky, you're muted, please.
What we do in practice, are you hearing me now?
Yes, loud and clear.
Yeah, is that you are either an entity registered under CAMA, in which case your tax affairs are handled like every other company, or you are registered under NEBSA and OGSA, in which case you are treated with all the benefits and perquisites associated with being an enterprise in the free zone. Dual registration, perhaps in terms of transition, yes, but in practice, we do not accept dual registration.
Okay.
We don't.
Okay, that's very clear.
You must either be in the custom territory as an entity in the custom territory, or in the
free trade zone.
Free trade zone. You cannot be both.
Okay. Yes. So thank you, Mr. Lucky. Like we said, we would. There are questions currently in the Q&A platform here, and I'm going to read out a few of them so that we can quickly respond to them too. The first question I have here is, what are the benefits for a company to have its manufacturing plant in the free trade zone? Benefits for a company to have its manufacturing plant in the free trade zone. Martins, I don't know if you want to address this.
Thank you, Peter. The benefits are enormous, especially if whatever you produce, you basically take out for export. If the benefits include that you would have tax incentive, meaning that you would not be liable to, you'll be able to import your raw materials directly from abroad into the free trade zone without the payment of any duty, custom duties. As long as those materials are designated for the free trade zone, you would have tax exemptions, especially VAT also, which would have been paid at the ports when you bring in these materials. If these goods are designated for exports, you also will not pay CIT on your profits if the goods that you manufacture within the zone are designated for export. Where you typically would have challenges is where you manufacture within the zone for the customs territory. Because if you are bringing in the goods into the customs territory, whatever duties you did not pay on the raw materials would crystallize on the finished goods at that time. And if you're bringing in the goods to sell in the customs territory, that is outside of free trade zone, but inside Nigeria, then you will still be liable to pay tax. So at the end of the day, it's not just about setting up manufacturing within the free trade zone. Your goods also have to be goods that that would either be consumed within the zone or will be designated for export to be able to take advantage of these benefits. There's also the benefit of exchange controls. The exchange controls don't are not as strict within the zone as you have outside the zone. You are also able to bring in expatriates without any restriction if you require them to work on your manufacturing plants within the zone also. So these are some of the benefits that you get. But like I said, it's all dependent on where your goods are meant to be consumed. If you are manufacturing for the customs territory, you may find out that the benefits are not as significant as if you are manufacturing for consumption within the free trade zone or for export.
Okay, thank you. There's a rejoinder to the question which I would pose to Mr. Lucky. The question is, if we sell products produced in the free trade zone to a custom area, do we need to pay VAT on it? If we sell products produced in a free trade zone to a custom area, do we need to pay VAT on it?
All right, thank you. The advantage of operating in the free zone is that you can bring in your raw materials from abroad directly for use in the free zone without paying duties and VAT. At each of the zones, we have Nigerian customs. And when you are bringing in your things from the ports, they will check to know that it is consigned to the free zone. And also at the point of entry into the designated free zone, it will also be checked. If after manufacturing, you now want to sell into the custom territory, the customs will collect VAT on what you are selling into the custom territory, because it is now like you are bringing in, you are selling things into Nigeria, just as if you are bringing something from UK and it's coming into Apapa ports to go to maybe Alaba market or to, so VAT will be paid at the point of exit when you are taking those things into the custom territory. Yes. In fact, there is a value chain on how it is. They will go back and look at how it came into you and how it's now going back into the custom territory after the manufacture. So to answer your question, summary, yes, there will be VAT if you are selling into the custom territory and you pay it to the Nigerian customs.
Okay, I will take 2 more questions for now, and then we can then continue with the discussion. Thank you for that response. I think the question is in the affirmative, that VAT is applicable when goods are sold from the free trade zone to the custom territory. The question I have here says, I would like to understand, okay, this is still to Mr. Lucky. I would like to understand what the responsibilities of a company not in the free trade zone, but provide services to a company in the free trade zone, especially in relation to VAT and withholding tax. Can they invoice the FTZ company in USD? And can they also be paid in USD? This relates to services provided by a company in the custom territory to a company in the US in the free trade zone. The question is, can they invoice the FTZ company in USD, and can they also be paid in USD? And the VAT and withholding tax implications of that transaction.
Thank you. Let's break it down. An enterprise outside the free zone does not enjoy tax exemption. So if it is providing a service or doing a contract inside the free zone, the income of that enterprise that is coming from the custom territory will be liable to withholding tax. So the enterprise in the free zone will deduct withholding tax in payments that are going to the contractor from the custom territory. The currency in which the withholding tax will be done will be the currency of agreement or the currency of the contract. So if the contract is in Naira, the withholding tax will be in Naira. If it is in dollars, it will be in dollars. For VAT, VAT is a consumption tax. So who is consuming here? It is the entity in the free zone. But the company that is providing the service is outside the zone. The company outside the zone will have to show evidence to the revenue authority that the service was provided to an enterprise in the zone, and that is why a consumption tax did not apply. And when it applies, it will also be in the currency of the contract.
Sorry, Mr. Loki.
We also have situations where entities that are in the zones provide services for enterprises outside the zone. Where that is the case, VAT will apply and it will be deducted or withheld by the entities in the free zone. You can go ahead with your intervention, Mr. Martins.
Okay, thank you, Mr. Loki. I think the question I have is with respect to your comments around the entity outside of the zone having to prove that the service was provided within the zone before it will not charge VAT. Because when you first started, you said VAT is a consumption tax, and the person consuming is the entity within the zone. So is there a reason why the custom territory entity still needs to prove where the service was provided before the entity consuming, which is the free trade zone entity and is liable to enjoy that exemption, should enjoy the exemption from VAT? And I asked this question within the context of the changes that were made to the VAT Act, where it's clear that where the consumer of the service is not within Nigeria, especially for non-resident entity, there will be no VAT. The VAT Act doesn't say that the Nigerian provider of the service needs to prove that he went abroad to provide the service. In fact, that was the argument that we used to have around the definition of exported service. But that definition has been clarified to show clearly that as long as the provider of the service is the person enjoying the service is not in Nigeria, it doesn't really matter where the service was provided. So is there a reason why it's a bit different for free zone entity, where I believe they should be able to enjoy the exemption irrespective of where the provider of the service provides it, given that that service, the benefits will be enjoyed within the free trade zone?
Yes, I think we need to go back to the previous perception that the free zone is a country of its own. When you do business there, it is like another country. I think the law and others has changed in recent times. The free zone, if you look at it, when you look at the definition of what constitutes Nigeria, both in the Constitution and the amendment to the tax laws, it is completely obvious that the free zones are inside Nigeria. They don't enjoy the status of countries like Ghana and others, where you have diplomatic relations where you have different currencies and where, you know, all the other things apply. So yes, the free zones for purposes of just transaction enjoy these benefits on exemptions from certain taxes, but in terms of their status, they are part of the territory of Nigeria. Let's get that one. So that is the reason why it is required. In fact, the procedure of the free zone authority is that when you are going into the free zone to provide a service or you are bringing them, it is documented. So any enterprise that is asking or giving out contract to someone in the custom territory, even at the point of signing of those contracts, the free zone authority is notified. They have those documentation. So it is not an issue. It has to be made available, and that is what will be accepted. It is not whatever is signed between the two business entities, the one in the territory and the one in the free zone, because sometimes they could be related parties, but the authority, that's the NEBSA or OGSA, have those transactions. If you are coming in, because the free zones are regulated, you know, enclosed. If you are coming in to do something, it is documented. If you are taking something out, it is documented. And those are the evidences that is needed to show that, yes, this activity or this service was rendered in the free zone or outside the free zone. And is it?
Okay, thank you, sir. But does that not negate the principle, the destination principle under which our VAT laws have been drafted? Because if we then say that if the services are consumed in where the services are consumed don't matter, what matters is where the services are performed. Isn't that more akin to the origin rather than the destination principle?
You are still going back. What is at the back of this argument is this still principle of the free zone is another country. No, the free zone is not another country. So the issue of destination principle, I don't think, you know, may not completely be appropriate in these circumstances.
Yeah, it's not another country, but otherwise there is no difference between the place we call customs territory and the free zone. If we assume that it's all one, I believe that there is a reason why we've designated one place and called it the free zone and another place the customs territory. Because if we then assume that it's one place, then there is no question of whether somebody has come in or gone out. I think the reason why we say somebody has gone in there is because we believe that inside there is a different place from at least a tax perspective from outside there. That's why we say, oh, that's why you say, oh, if he has gone in, I agree to an exemption. But I'm saying, should it matter whether he actually goes in physically or the consumption of the service takes place there, takes place within the zone? So whether there is a difference in both places, I think we both agree. That's why you said, for me, that he has to go into the service. I'm saying, oh, since we both agree that there's a difference between in and out, what should really matter for VAT? Is it going in or that the service is performed, is consumed inside? I think that's where we are.
It is not whether the service is consumed inside or going out. Who consumed the service?
Exactly.
That is the issue. And the issue of who consumed the service will also be verified through documentation. That is why I gave that caveat earlier on, that if you are an enterprise in the zone, whenever you are giving out a contract to somebody in the custom territory, the authority, that is NEBSA or OGSA, must be in the know. Those information, the documentations, they will have it. In fact, in some instances, the documents, copies are lodged with the authority. That's the issue. So it is who consumed it. If the person who consumed it is outside the free zone, it is subject to VAT that will be paid. If the person who consumes it is inside the free zone and there is documentation to show it, it will enjoy the exemption that is available to it.
I think I totally agree with that position.
Yes.
The person who consumed it is in the free zone. He should enjoy the exemption. Peter.
Yes, I think the discussion is getting very interesting and very heated now. And I think where we landed actually leads me to the very next question. Martin, you wanted to say something?
I don't see it anywhere. There's no
Yeah. The next question from Mr. Lucky, because I think there are a lot of people.
Sorry, Peter, I'm not sure he answered that question around whether you can bill in USD.
Yes, he answered it. He said
I answered it. It is the currency of the transaction. That is what the tax, if any, will be paid on.
Yes. Yeah, I think, but the question was whether the currency can be USD. I don't think it was whether tax can should be paid in the currency of transaction. But I think the answer is it can be inferred anyway that you can actually pay in USD, and then you will pay the tax also in USD.
Yes, if the transaction is in USD and there is withholding tax to be paid, it has to be in USD.
Yes, I agree.
Yes, no.
Okay, so we still have some poll questions, about 5 of them. But before we go to the poll question, there is one question that is linked to what we've just discussed now, which then is, what are then the incentives, the tax incentives? Remember, our topic for today again is the ABC of free trade zones, the attributes, the benefits, and the challenges. So, and a number of people are itching to know, what are then the specific benefits or the specific incentives that a free trade zone entity stands to enjoy? And this question is to Mr. Lucky.
Thank you. I think Mr. Martins has actually, answered part of that question, but maybe they want to hear from the man who is in FIRS. So let me reiterate what Mr. Martins has said. One, you are exempted from paying company income tax. That is for profits that are earned from activities carried out through your exports. You are exempted from VAT. In fact, the law says enterprises in the zones are exempted from virtually all taxes, perhaps except a few. One, employees of enterprises are separate legal entities. They are not the same as the enterprises. So payee will apply to employees of enterprises in the zones. So we expect that the payee of workers in the free zones will be remitted to the state internal revenue of the state where the zone is located. We also have dividends that are earned by investors in the free zones. Yes, the investors are also separate legal entities from the enterprises in the zones. So the dividends at the end may also be liable to withholding tax. But the enterprise itself in the zone enjoys tax exemptions in terms of CIT, all our, and in addition to that, from the Company Income Tax Act, they are allowed to export 25% of their production into the custom territory. So the issue is, do they do 25% into the custom territory, or they do 100%, or they do? So that also puts a qualification on the level of exemption that they will get from company income tax, and by association, all other taxes that also goes along with it. They enjoy as Mr. Martins has said, you can bring in expatriates. There are no constraints as to the expatriates you can bring in. You can exit, enter. You can exit at will. You can repatriate your profit. And the customs is there to also look after what happens at the border when you are entering and when you are going. So the exemptions are there. Basically, you enjoy tax exemption almost unlimited, subject to these little conditions that I've enumerated earlier.
Thank you for that very explicit response. We'll take a 2-minute water break so that everybody can stretch their legs and feet. We've been sitting for over an hour listening to this very interesting conversation. So we'll come back in about 2 minutes. Please stay on the line, don't go offline. In 2 minutes, we'll continue the session, and we still have a lot of questions coming in the Q&A segment. So please stay put while we take a short break.
Tax is being reimagined for today's world, a world that has changed dramatically. Geopolitical shifts, technological innovation, globalization, new business and consumer demands. These trends are transforming the way tax leaders are thinking about tax. And businesses tell us they spend more on annual tax compliance than on their annual audit. The old country-by-country, tax-by-tax approach no longer works. Businesses increasingly want a strategic relationship with a partner who can travel the journey with them to a new target operating model for their tax and finance functions. A model that is digital, global, efficient, and effective in unlocking strategic value. Welcome to Tax Reimagined, a new framework which brings together our tax knowledge and transformation skills, our leading technologies and our expertise in delivery across the world to meet the new demands businesses face. This is not a one-size-fits-all approach. It's about deploying skilled solution architects that can work with you to design, implement, and continuously improve the target operating model, and aligns your tax department's vision and strategy with the broader business objectives, from in-house automation to outsourced managed service solutions. This teamwork is a platform for reimagining the future of tax. KPMG is investing collectively and is committed to innovation and developing our suite of tax technology solutions, training 10,000 of our tax professionals to become experts in technology and solution architecture, building best-in-class regional delivery centers and consistent global delivery standards. By acting collectively and acting now, the future of tax is here.
Yes, hello. I hope we're all back from our short break. Yes, please, you can, just like we did earlier in the first poll, you can either scan the QR code to access the chat polls, or you visit that link that is currently being displayed on the screen. We would have some 15 to 20 seconds to do this. You either visit the link that has now been shared in the chat box there, or you scan the QR code to access the questions. We would start the poll in about 5 seconds. Okay, I think we can start. Can we go to the polls? Yes, please start. Which of the following is a regulatory framework for free trade zones in Nigeria? 1, NEBSA, the Nigerian Export Processing Nigeria Export Processing Zone Act, the Oil and Gas Free Trade Zone Act, C, all of the above, and D, none of the above. Which of the following is a regulatory framework for free trade zones in Nigeria? I'm wondering if the all of the above here would also include none of the above. Well, I think not all of the above represents the NEBZA and the OGEBZA. Okay. We have 28 responses so far. We have close to about 200 of us on this session right now. So only 30 responses. We still have a lot to discuss, so I wouldn't want to dwell on this. Okay, so about 60% says all of the above, 37% thinks it's the NEBZA, and then about 0% thinks it's the Oil and Gas Free Trade Zone Act, or GEBZA, the regulatory framework. Okay, all of the above. We'll find out. Please just stay put. We'll find out very shortly, but a lot of people think it's both the NEBZA and the OGEBZA. Okay, next poll question. Are strategic locations considered when government wants to establish or designate FTZs? I think Martins touched on this when he was giving his introductory comments. Are strategic locations considered when government wants to establish or designate FTZs? So far, there is a very clean 100% saying yes, from about 30 responses so far. So what we are saying emphatically is that governments would always consider strategic locations when choosing to designate FTZs. Okay, we have some no now. We have some persons who are saying no. I think the answer is clear. Government, what we are saying here, 97% of us believe that government will definitely consider strategic locations when establishing or designating an area as a free trade zone. Okay, the next question. Can private entities operate in Nigeria's free trade zone and enjoy the related benefits? Can private entities operate in Nigeria's free trade zone and enjoy the related benefits? Majority of us have answered yes to this question. We have some people who are not sure if private entities can operate in the free trade zone and enjoy the benefits. And interestingly, we have some public, some saying no, that private entities who operate in Nigeria's free trade zone may not be able to enjoy the related benefits. I think on this question, okay, no has changed their mind, so it's 0 now. Okay, not sure. Please keep the answers coming. Okay, we have about 40 responses so far. I think we can, not sure. Can private enterprises, just for the sake of those who said not sure, Mr. Lucky, can you comment on this particular question? Can private entities operate in Nigeria's free trade zone and enjoy the related benefits? Just for clarity.
Zones are private entities. In fact, the free zones are not meant for government entities. Government provides the regulatory environment, I mean, the oversight, but the operators are almost entirely private entities.
Private entities. Yes, thank you very much for that very apt and quick response. So can we go to the next poll question? Do you think Nigeria will be able to protect its local companies from competitors with the use of FTZs, free trade zones? Can Nigeria protect its local companies from competitors with the use of free trade zones? Majority of us believe that yes, there is a possibility that Nigeria is able to protect its local companies from competitors using free trade zones. Some people are saying maybe, maybe, while some 14% of us here, 13 now, believe that it's a no, that government is not able to use free trade zones as a vehicle to protect local companies from competitors. Okay, I think the polls we have taken are enough for now, and it will also help us shape the discussions we'll be having. Going forward. So thank you. We'll go back to the Q&A section so that we can be able to address some of the questions that have been raised before we continue the general discussions we've been having. There's a question here that says, I'd appreciate if the discussant can shed some light on the AFTA and its potential result in tax leaks. This is quite unrelated to the subject we are discussing. Martins, I don't know if you want to address this very quickly. I'd appreciate if the discussant can shed some light on the AFTA and its potential to result in tax leaks.
Okay, I think it's to. I don't know what the person means by tax leaks anyway. Today, there are already incentives for non-oil exports that currently exist. So if what you are asking is whether somebody who in a sense begins to export products out of Nigeria under the auspices of AFTA will lead to tax leaks. I'm not particularly sure because, again, like I said, there are provisions of the law that deals with exports already, and there are incentives that are under the law for non-oil exports. Those won't change even under the introduction of AFTA. And if it's about people coming into Nigeria to do business, the laws are also there, and the laws won't change with respect to the points at which you will become taxable in Nigeria. Whether we have AFTA or not, AFTA is more, it's focused more right now around the ease of doing business across the continent and trying to help Africa and African countries improve on their industrialization agenda. They may be one or two issues, but I don't think that it will be significant. The laws won't change if you export things out of Nigeria into the continent because of the ease that was provided under AFTA. If the tax laws as currently obtained will still apply to you.
Okay, thank you, Martins. Another question here says, after getting approval from NEBSA, should company cancel CAMA registration? I think this issue of dual registration was also discussed significantly earlier on. After getting approval from NEBSA, should company cancel CAMA registration? Mr. Lucky, do you want to take that, please?
If the person concerned wants to enjoy the benefits of the free zone, he has to notify the Corporate Affairs Commission and get his registration status, regularized. If that will require either suspension or deleting, the Corporate Affairs Commission will do what is appropriate. But like I said earlier on, you cannot have dual registration. If you are going to be in the zone, you have to register with NEBSA or OXA, and that is what will show in your name. In fact, the acronym FZE will follow instead of LTD.
Yes, thank you. And also related to this one is quite interesting. And the question says, can the owner of subsidiaries in a zone, more like a zone, is the owner of a licensed entity in a zone themselves, carrying out approved activity, also enjoy the zone's benefit simply through that relationship with the licensed entity? More like the parent.
The answer is quite obvious. We must separate the subsidiary from the holding company. So the subsidiary is a separate entity, and the holding company is a separate entity. The license of the subsidiary cannot be used by the parent company. I think that's just in summary, without going into the nitty-gritties.
Yes, okay. Thanks for a very quick response there. Very interesting question. I'm sure people just want to know the extent to which the benefits can go, especially for companies operating in a group. Okay, we have one here that says, what are the specific benefits of operating in the free trade zone? It's been duly answered by Mr. Lucky earlier on. Another one says, dual registration is disallowed. Understood. However, can an entity duly registered under CAMA float another duly registered under NEBSA, thus having two different entities? Mr. Lucky, do you want to take that? It's direct to you.
Yeah, I don't any law prohibiting anybody from, registering with NEBSA or OXA. What we have is a list of approved activities. That is why the registration process with NEBSA and OXA is a little bit different, because they will look at what you want to do and look at what is allowed or what is approved in the zone. So that essentially, I think, is the case.
Okay. Okay. This one is also directed to you, Mr. Lucky. It says, good morning. Thank you for putting this together. I would like to clarify if this VAT exemption still applies to approved companies in the zone, vis-a-vis the MOU signed between NEBSA and the FRS, where item 1 in the appendix to the MOU specifically states that the FTZ will pay VAT on purchase from the customs territory, and FRS will refund the FTZ entity company in 90 days.
Yes. That issue came up in our negotiation, because when you situate our environment and the way things are done, we have come to realize that quite a number of the enterprises in the zones are either subsidiaries or associates of companies outside the zone. And in order to ensure that we don't have leakages, that provision was put there, that if you are going to buy if you are an enterprise in the zone and you are going out to purchase something, you have to pay the VAT to the person you are buying from. And the evidence of that VAT you paid, you bring it and you get your refund. This is one of the areas that we had quite a heated argument in the course of working on these guidelines. Subsequent to this, there has been further engagements where we now agreed that if you want to do such purchases, usually there is a document that is given to you, like a permit by OXA or NEBSA. With that, the issue is eliminated. So what we eventually agreed is that once that purchase you want to do outside in the custom territory, NEBSA or OXA is aware of it and documented it, then with it, even the person you are buying from will not charge you VAT, because it is now a document that the vendor in the custom territory will also present to the revenue authorities to show that the person they sold to is in the free zone. So this issue has been ironed out, and that is the current position.
Okay.
Sorry, Mr. Lucky, if I can just come in here, are we not creating additional bureaucratic bottlenecks when you consider the context of a free trade zone was primarily to, first of all, help eliminate some of the significant bottlenecks that you would have in the customs territory and ease doing business? Because when I registered the zone, I already have a license. Is there a reason why every time I want to make a purchase, because I only operate in the zone, I would report that purchase in my financial statement, which is available to the tax authorities. I don't have any operations anywhere else. So it's obvious that if I'm buying goods, it's for consumption within the zone. Is there any reason why I need to obtain a different permit every time I make a purchase? And why my current license will not suffice for that purpose?
Thank you. In the early part of my previous intervention, I said most of the operators in the zones are either subsidiaries or associates. They have one link or the other with the custom territory. Incidentally, that is the reality of our free zone environment. Secondly, this requirement is not new. In fact, all the operators in the zone, they know this, that whenever they have to go outside the zone to make purchases, the supervising authority, whether it's NEBSA or OXA, documents this. And the essence is to ensure that what is bought actually comes into the zone. Not that you get a paper, you go buy something, and the delivery goes to an associated company elsewhere. So when you want to do these things, want to do a purchase, they will document it. At the end, when that item is coming in, they also document it. And that is why I told you that FIRS has now agreed that once this documentation is in place, one, it helps us to eliminate the issue of making refunds, because our refund is not automatic, at least until the law is changed. Our reforms takes a certain procedure, which to some extent may not be very appealing to operators in the zone. So once we have this window to eliminate, this clog, and the authorities have agreed to it, we have agreed to it, it makes things to work well. Naturally, the authority must be able to know what is coming in and what's going out. Take this, that most of the enterprises in the free zone are floated by entities that are already in the custom territory. So it is a safeguard for themselves, for the revenue authority, and even for the supervising authority. It is not against ease of doing business. It has been there. In fact, almost all of them, they enjoy, they like it, and they know it. So we're not putting an additional burden. It is something that traditionally has been there. You cannot say customs should not be at the gate in entering into the zones. They've been there. So it's not something new. You cannot say immigration should not be there. Even though you say...
Who am I to complain?
Okay. Thank you very much, Mr. Lucky, for that very good response that you've given there. We have one interesting question here too. It can go both ways. It says, what are the specific activities permitted under the free trade zone? The other part would be, what are the activities not permitted? So I don't know if you can throw some light on this. Those activities that are approved activities and activities not permitted.
I think I will just simply refer the person who asked that question to go and look at the NEBSA Act and the OXA Act. The schedule of activities is attached. It's a schedule at the end of the act. It's a long list. You'll find it there. What is allowed and what is forbidden, they are all there.
Yeah. Okay, thanks. Okay, I think we can do two more questions here. The questions keep pouring in. If a company in the customs area invoice a company in the FTZ without VAT, and the company in the FTZ also didn't deduct withholding tax on the invoice, how will the withholding tax not deducted by the FTZ be treated? If a company, okay, continue.
Ask again, let me, because this is tricky. Go on.
No,
So if a company
in the customs area invoice a company in the free trade zone without VAT, and the company in the free trade zone also didn't deduct withholding tax on the invoice, how will the withholding tax not deducted by the free trade zone entity be treated?
Well, I think I should just say, first, when was the transaction carried out? Because we know that our engagement, the engagement of the revenue authorities with the free zone, especially with respect to withholding tax and VAT, has been fairly recent, within the past 1.5 to 2 years. So if you are talking about transactions that are about 5 years ago and understand, maybe not. But in recent times, since the law changed, if you are in the free zone and an entity from the custom territory provided a service to you and you did not deduct withholding tax, you are in breach of the law. You have to remedy it. Then for the entity that is in the custom territory, that is invoicing the entity in the free zone, I think we have talked about this, about the part of VAT. So that is quite straightforward. Who is consuming, and I expect the entity in the free zone, if is the consumer, may not be liable to pay VAT on it. It depends, though it may depend on the terms of the transaction, but generally we think that entities in the free zone may not be liable to the VAT. And this question also links to the one we just addressed earlier on about documentation. Because for you to invoice the entity in the free zone, I am sure the entity in the free zone may have approached you with a document from the authority at allowing them, authorizing them to buy what they want to buy from the custom territory. And that will form the basis of the documentation for the custom territory entity to give to the revenue authorities that, yes, we sold an entity in the free zone and there's no VAT to be paid. And the approvals from NEBSA or OXA, sometimes they have it, and so it helps everyone.
Okay, I think that's very clear.
Sorry, sorry, Peter.
Martins, yes, please.
Because it looks like the person who asked the question is a company in the customs area. So I just want to add that if the free zone entity hasn't deducted withholding tax from you, you don't have any fault in that being in the customs area. You cannot deduct from yourself. You would just report the income when it's time to file your returns and then pay tax. So you can't be held liable for the failure of the free zone entity to deduct withholding tax if it applies on payments to you.
Yes. Thank you very much, Martins, for that intervention. One question here says, if a company in the customs area invoice a company in the FTZ, I think I've read this one, sorry. Is the portion of profits made from non-exports liable to companies' income tax for companies operating in the export processing zone? More like if you don't export out of the country, but you sell to the customs territory, is it liable to companies' income tax?
It depends on the quantum, because this is a matter of law. The law allows you to export about 25% into the custom territory, but whatever you sell into the custom territory is liable to tax.
Yeah, okay. That's beyond the threshold, just to clarify.
It is not beyond the threshold. Whatever you sell into the custom territory is liable to tax.
Companies income tax, just to clarify.
Yes.
Okay. I have two more questions. It says, from Mr. Lucky's submissions, does it mean Nigerian companies registered under CAMA with a free zone license would be treated strictly as a Nigerian company, as Nigerian companies?
Come again, Nigerian companies registered under
CAMA. Does it mean Nigerian companies registered under CAMA but with free zone licenses will be treated strictly as Nigerian companies?
I have said earlier on that you cannot be both a free zone enterprise and a Nigerian company. I am sure our colleagues from the authorities are listening into our conversation. You have to be registered under the free zone as an enterprise to enjoy those benefits. You cannot be both sides. I think.
Okay. Yeah, that's clear. That's
yes.
clear. Okay, one other question here, which is a little bit more administrative. It says, how can a free trade zone entity remit VAT to FIRS, considering the fact that they were registered, I think you wanted to say they were not registered under the tax authority, under the tax territory.
Well, if all entities in the free zone, their particulars are with the FIRS and they are registered. Part of the engagement that the FIRS had with the authorities, NEFZA and OXA, is to ensure that only enterprises that are licensed by them, that the list is shared with FIRS and tax registration numbers are given to them. So virtually all of them, maybe the person who is asking this question, may not know the status of their own registration. Virtually all of them have tax registration. But if the person has a problem, we have 3 offices. We have our office in Lagos at Agidingbi, Tax Incentive Management Office in Lagos. We have Tax Incentive Management Office in Port Harcourt, Moscow Road, and we have one in Abuja to cater for the northern part of the country. You can go to the office and check for your tax registration number. They all have.
Okay, thank you very much. One question, VAT exemption. Somebody's asking, VAT exemption proof for goods into the free zone is simple enough, but how about for everyday and for all services? More like everyday purchases and services. That is not clear.
Everyday purchases and services.
Yes.
I don't understand what he meant by everyday purchases, because for example, I am aware that companies that are providing ICT and telecommunication services, have sought an intervention and they have been advised accordingly. I don't think we need to start looking at every petty thing. Within the zones, there are people who also, perhaps we need to state that within the zones, there are different categories of enterprises. Those who manage the zones have taken care of all these little requirements, everyday requirements, which they also get from there. I think the zonal authorities have control over that. We are not looking at everyday little things in our listing, but if it is material and repetitive, then it may fall into what we are discussing.
Okay, absolutely. Yes, so I think we've done a lot about the tax implications and VAT, withholding tax, the benefits. We want to discuss a bit on administration. What are those tax filing requirements for companies operating within the zone?
What we have currently is that entities within the zone are required to file their annual tax returns like every other company. However, we must distinguish between filing and paying tax. They are required to file their returns, and if there are taxes to be paid, they will pay it. And if they are completely out of the tax, let me use your word, they are not exposed to paying tax, then they won't pay. But it is very, very important that they file their annual returns. We also require that they file VAT returns and withholding tax returns. Where there are taxes payable, they will pay. What is payable is actually what is deducted in their capacity as collecting agents, because most of their transactions may not necessarily be liable to tax. But where there is exposure in their role as collecting agents, whatever is collected should be sent to the revenue. Let me also give a further insight as to why it is important that they file annual returns. Every country in the world gives out incentives, almost every country. At the end of the year or at specified period, you give account, you want to evaluate how much you have given out as incentives and the benefit that is accruing. No government in the world is Father Christmas. So when you give out incentives, you are doing it because you expect that there will be some benefits to the country. So when you file your returns, especially the CIT and all other annual returns, the revenue authorities use it as input. The data is needed for computing our tax expenditure. That is, how much tax have we forgone by giving out these incentives? It is also used to look at what level of businesses have been generated within the country. How much or how many employment has been generated. So if you look at the basis and the reasons for granting this incentive, government will also want to look at, after granting these incentives, what are we getting in return? Let's remember that tax, not all taxes come in the form of cash collection. So non-cash collection may come from entities that are in the free zone because they have linkages and multiply effects in the economy. So they must file returns. They must file returns for transaction taxes monthly. If there are taxes to be paid, pay it. Those are primarily the obligations to FIRS. To the state internal revenue services, they must file their payee returns. And of course, I want to believe that is almost on a monthly basis because they will pay salaries. And if the business is doing well and they are paying dividends, of course, the dividend will also go to the appropriate revenue authority. The withholding tax on the dividend will go to the appropriate revenue authority. So filing is important. But please remember that filing is not synonymous as paying.
Yeah.
Because most often we have come to realize that when you ask entities to file, they construe it to mean come and pay. Even entities that are outside the free zone, they make losses. They file, but there will be no tax to be paid. So thank you for now.
Yes. For a second, Mr. Lucky, I thought you were saying the dividend will also be paid to the FIRS.
No.
Well, you have clarified to say it's the withholding tax on the dividend that should be paid to the appropriate tax authority. Yes, that's very clear. And still on withholding taxes, the question, and it's an interesting question too, and we get this a lot. Should a free trade zone entity actually deduct withholding taxes from whether foreign vendors, local vendors, or fellow free trade zone enterprises?
All right, I think that is quite interesting. Withholding tax is just an advance payment of income tax. So the basic principle is the person to whom the payment is going to is still liable to income tax? Is the transaction also subject to income tax? So if the transaction is liable to tax, withholding tax may apply. If the entity to whom the payment is going to is liable to pay tax, withholding tax will apply. That is why if an entity inside the free zone is working for another entity inside the free zone, both are exempted, at least in principle, from company income tax. Withholding tax will not apply. But if it is with an entity outside the zone, withholding tax may apply.
Okay, what of a company, for a company outside, a foreign vendor?
Yes, but if a foreign vendor, you ask yourself, is the transaction liable to tax? Yes. See, no country trades off its taxing rights. Because if you don't tax it, the person will take his money, go to his home country, and the home country will tax it. So why don't you tax it? If it is liable to tax in Nigeria, you tax it. If it is withholding tax, you take the withholding tax. Sometimes the withholding tax may even be the final tax, but you tax it.
Okay. So just a side question, does it then mean, because from your response, it does seem like the free trade zone entity also has an obligation to determine the contracting parties' liability to tax in Nigeria. Can they also approach the FRS for transactions that are not very clear to get clarification so that their activities and their tax administrations are guided?
Very, very, very well. Our tax policy department, we give them guidance. We in tax incentives management department, we give them guidance. In fact, they are free to approach any of our offices. They will get guidance. If at one level they are unable to be attended to, definitely once it's escalated, they will get proper guidance. I will advise that where issues of lack of clarity comes up, that it is addressed to our tax policy department, that warehouses are responsible to give guidance to taxpayers on the appropriate tax treatment of transactions when in doubt.
Okay, we are fast running out of time. I think this question has been answered. Out of curiosity, do companies in the free trade zone pay taxes? I think Mr. Loki has also addressed this question. Another one here says, we would like to know if FRS has issued any documents, regulations, circular, subsequent to the 2022 MOU to communicate the resolution between FRS and the NEBSA regarding the MOU appendix on VAT on purchase of customs territory and the 90 days refund issue. This would be necessary to lay issues to rest between FTZ companies and others. Mr. Lucky.
FRS has done that. For entities that are under the oil and gas free zone, that has been done. And in fact, we are now in auto run. With entities in under NEBSA, negotiations as to the contents of the guidelines have been concluded, but FRS cannot communicate that directly to all the entities. Rather, FRS will do that through NEBSA. So NEBSA will reach out to them, but all the intricate issues about filing, about exposure to VAT and withholding tax and all those things have been sorted out with NEBSA. I am sure the person that asked that question, if they get across to NEBSA, they will get appropriate guidance. The guideline is awaiting signature of the two government institutions, FRS and NEBSA, but it has been concluded. And what I just discussed are derivatives of or components of that guideline.
Okay, Martin, do you want to say something?
Not at this point, Peter.
Okay.
Yeah, I think Mr. Lucky has done a great job of answering the questions too.
Okay, there is a final question I have here, which is also quite new and different from what we've been saying. It says it would like to know, to confirm if entities within the free trade zone are obligated to comply with the transfer pricing regulations when the party to the transaction does not operate within the free trade zone.
Yes, I think to answer that question, the first layer will be, can an entity or is an entity in the free zone required to file returns? The returns are not only CIT. If you are also exposed to transfer pricing transactions, you should file. Please remember that filing is different from paying. Filing obligations is different. Then for filing, the penalties for not filing under CIT is a little bit liberal. Then for transfer pricing, it is not. The act of filing may look mundane, but the penalties under the transfer pricing regulation is quite material. So I will advise that entities that are prone to transfer pricing related transactions or falls into the threshold should file promptly. It's necessary.
Okay.
But sir, does it matter that when you look at the provision of the changes of that was introduced that talks about filing for free trade zone entities, that it says in reference to only a specific section of the CETA, and that section makes no reference to filing anything other than audited financial statements and income tax returns. It doesn't make reference to filing transfer pricing returns.
Thank you. If you look at the old section 18.1 of both NEBSA and OXA, the old section 18.1, that was the section that perhaps has its root from the prevailing way of enactment during the military era, where you have sweeping exclusions. That provision has been removed. Check. The provision that says you are not, you are excluded from all federal, you are not to obey all federal, state, and then if you check very well, it has been. So please look at, take the amended act now and look at the act as at maybe 2019 or 2015, 2016, section 18.1. You will see that is, so that amendment, one, requested that you file income tax, section 15, section 55 of CETA.
Yes. That
amendment also removed the exclusion that you had before about all other taxes that don't file. It is no longer there. Please check.
Okay, sir. Thank you.
Thank you.
Yeah, thank you very much, Martins and Mr. Lucky. The final question here is, can a company lose its FCC operating license? Can a company lose its FCC operating license?
I may not be able to give a complete answer to that because licensing of enterprises is handled by NEFZA and OGSA. So the circumstances and the conditions for either licensing or delicensing is known to these two authorities. That I am sure it is possible if there are breaches.
Okay, thank you very much, Mr. Lucky. Our time is fast spent. There are a couple of other questions that are still trooping in, but we are very sorry. We would not want to overshoot on time, as we know that a lot of us here, even though we would like to stay on, would have other scheduled engagements. We would like to thank Mr. Lucky for the time, and Mr. Martins too for the time spent so far, and for every one of us who have stayed on from the very beginning up until this very point. Thank you very much. Your questions that we've not answered your questions here today does not bring us to the end of interactions. You can always search us up on LinkedIn and our social media platforms of KPMG. Send in your questions. We'll be very happy to respond to you. Mr. Lucky has also mentioned that the service is very open to your questions and your inquiries, and they'll be very happy to also provide you with those clarifications that you need. So we'll be ramping up, and I will, of course, like to have concluding remarks from both Mr. Lucky and Martins. I think Mr. Lucky can go first.
Okay, thank you very much. I have two closing remarks. One is that the enabling legislation for NEFZA and OGSA, both are on the average about 30 years old. Most of their provisions have become a little bit old and not in tandem with current realities in our national environment. There is a possibility that some of these provisions in the near future may experience some upgrade, amendments. Secondly, we also have changes that are coming in terms of how incentives are administered worldwide. Some of us may be aware of the BEPS inclusive framework, especially the Pillar 2, being anchored by OECD, requiring that virtually every country in the world, if you sign in, will have a minimum tax of 15%, minimum tax rate of 15%. Though it is subject to some little amendment, it's not our straightforward way of just doing the computation and put 15%. However, the icing in the cake is that if you fail to tax an income in your jurisdiction, that income will be taxed by another jurisdiction where that revenue is going to. So nobody, I don't think any right-thinking administration will allow revenue generated or profits generated within its territory to go free and now be taxed in another country, losing your tax right. So these issues are on the table being discussed, and it may change or have some impact on our portfolio of incentives in the coming years and months. I think we should just have this at the back of our mind. Secondly, the framework for free zone have evolved over time from different countries. I think Nigerian free zone scheme will also follow suit. There are different schemes all over the world. I think Nigeria's zone is one of the most liberal that gives everything when I say everything, you are, in most other countries, you have fairly reduced rates and there are sunset provisions. So gradually, as we move on in our journey as a country, there may be some little changes to bring our own free zone scheme in tandem, at least with what is obtained averagely globally. However, people should not think that government is about to withdraw this. No, I'm not saying it, but let's have these perspectives in mind that these are some futuristic things that are capable of impacting on our scheme and our free zone scheme and how we do things. Thank you. I also ask all those who have listened in to please file your returns and pay if there are taxes to be paid. It pays to pay your tax. All the zones we are talking about, they are in Nigeria. When they are going to work, they drive through Nigerian roads. The trucks pass through Nigerian roads. Even the number plates they use is Nigerian registered. So you are part of Nigeria. Let's show that commitment to enhance the economic development of our country by meeting our appropriate tax obligations. Thank you.
Thank you. Thank you very much, Mr. Lucky, for that, for your concluding remarks. Martins, I don't know if you're also.
Yeah, we've overshot the time already by 4 minutes, so I will just be very brief. And the first thing is just to thank Mr. Lucky for making our time today to spend this quality 2 hours with all our audience. I'm sure everyone here must have learned one thing or the other. We may not totally agree on everything, but it's always very good to have the opinion of the regulators also out there, because it helps people also plan. Finally, paying tax is not the only way to aid economic development. There are other ways you can aid economic development. Finding the source of foreign exchange, which has been pretty scarce in Nigeria. It's one way of aiding economic development, providing infrastructure in a particular area, also providing job opportunities. So there may be other ways that these guys also contribute their own quota that may not necessarily extend to payment of taxes. The conversation will constantly be ongoing. Mr. Lucky has been generous to say that you can reach out to him or the tax policy department. You can also reach out to KPMG also, and we will continue to provide our opinion to you. It's a robust conversation. It's an ongoing conversation. And Mr. Lucky was very right when he said this is an evolving landscape, and it's always very good to continue to keep abreast of the evolution, especially as it impacts our various businesses. Thank you again, everybody, for joining today.
Thank you, Martins, and thank you, Mr. Lucky, and thank you, everyone, for staying till this point. Till we come again, please, we typically have tax chats routinely, and you always get our adverts. So till we come again with the next tax chat, thanks and have a good day. Bye, everyone.
Bye.
Bye.
Tax is being reimagined for today's world, a world that has changed dramatically. Geopolitical shifts, technological innovation, globalization, new business and consumer demands. These trends are transforming the way tax leaders are thinking about tax. And businesses tell us they spend more on annual tax compliance than on their annual audit. The old country-by-country, tax-by-tax approach no longer works. Businesses increasingly want a strategic relationship with a partner who can travel the journey with them to a new target operating model for their tax and finance functions. A model that is digital, global, efficient, and effective in unlocking strategic value. Welcome to Tax Reimagined, a new framework which brings together our tax knowledge and transformation skills, our leading technologies and our expertise in delivery across the world to meet the new demands businesses face. This is not a one-size-fits-all approach. It's about deploying skilled solution architects that can work with you to design, implement, and continuously improve the target operating model, and aligns your tax department's vision and strategy with the broader business objectives, from in-house automation to outsourced managed service solutions. This teamwork is a platform for reimagining the future of tax. KPMG is investing collectively and is committed to innovation and developing our suite of tax technology solutions, training 10,000 of our tax professionals to become experts in technology and solution architecture, building best-in-class regional delivery centers and consistent global delivery standards. By acting collectively and acting now, the future of tax is here.